Hi, everyone, and thank you for joining us today for this presentation of starting a business in Arkansas. I'm going to go ahead and turn it over to our first presenter, Lori Lieblong, who's a business consultant here at the ASBTDC, and she can kick it off. Thanks, Lori.
Great to meet you guys. Welcome. I'm going to go ahead and pull up my slides because they include a little bit about our center. Let me get this into slideshow mode. Hold on. Okay, so we're all here for starting a business. Hope you guys are all in the right place. I'm sure you are. A little bit about us. We are part of a nationwide organization where we have centers all across the country on universities throughout the United States. We're a federally funded program that are match funded by universities across the Arkansas. We are the Arkansas Small Business and Technology Development Center. We're part of a statewide organization with centers throughout the state of Arkansas, and we are the University of Arkansas Center here at the U of A. A little bit about us. We provide a few different services. We do trainings like this on a variety of topics. This particular seminar, which is for people who are starting a business or looking for more information about maybe how to better, like more formally use their businesses or learn about us. Where we'll cover some specific topics, which I'll go through next. We have really good, great research that is part of our overall consulting services. So if you're looking for, whether it's marketing or starting a business or any other form of like consulting services that may involve our market research, we can provide that. And then probably the most valuable thing we do is our one-on-one consulting. We help people with the startup process. That ranges from, robust business plans and financial projections for securing financing from banks to if you just want to come and write a business plan to help you have a roadmap to start your business. Or if you're just looking to find out what licenses and permits you need to get from whether it's Secretary of State or your city, we will also sit down and go through that information with you in detail. If you have questions about human resources or you want to help develop your brand strategy and get marketing consulting, we also provide that. And what I really tell people when I meet people is just sign up. And we provide financial consulting as well. We have a part-time financial consultant that's very, very well versed. She was a former banker. And so what I tell people is, submit a request for consulting and we'll get with you, ask you. I always send people, give me real specifics on what you're looking for, and we'll figure out how we can help you or let you know if there's another organization within Northwest Arkansas that's a better fit. We only serve for-profit businesses, but I just tell people, let us know what you want and we'll kind of figure out how we can assist you. And so, it's broad in scope and we'll kind of figure out how to navigate you. My least favorite thing to do is say, no, I absolutely cannot do that unless it's something we do not do. We don't provide legal advice. We don't do technical things, like we don't design websites. We don't do bookkeeping, etc. So what we're going to go through today on this, whoops. What we're going to go, I'm trying to get this moved up. Okay. So what we're going to go through today, I will address understanding whether or not your business idea is feasible, like what you need to kind of think through to feel confident that you're ready to take the next step into writing a business plan and all the nit grit that you need to do to get it to the next step. Then we'll talk through the key components of a business plan. Then some other things that you need to think about. Then Cole from Wright, Lindsey, Jennings will talk about legal and tax issues. And then Ryan from Arvest is going to talk about financing. And so those are really the big important things that you need to understand when you're starting a business. There are, the specific things that you need to do when you get started as far as like licensing and permits, and we can definitely help with that. We won't go into real detail about that here, some detail, but you can always consult with us for those specific things. So, oh, okay, so talking about feasibility, we're gonna go through addressing whether or not there's a market for your business, what it means to manage a small business, and then understanding the components. Do you have enough money? Where will you get the money? Okay, so the market. To understand whether or not there's a market for your product, you need to understand industry driving forces. So I worked 10 years in corporate America before doing this. I've been doing this for 8 years. So I feel like at this point I'm equally, skilled in both things, but I like to use an experience I had in the corporate world because it was a very strategic effort that we did. It has some really good examples in terms of strategy, et cetera. But we all know now, I think, whether or not you're personally involved or not, that because more and more people are becoming educated in the last, like, we'll say decade, maybe a little bit longer, about like health related conditions, whether it's due to aging or lifestyle, that we have more control as individuals over our health and wellness. And so that is driving growth in certain industries and impacting like the health and wellness industry as a whole. So that is driving demand for certain products and services. So I worked in the vitamin industry for example, because people are often looking to like avoid prescription drugs if they can. That's driving demand for vitamins. You also see like more gyms popping up in the area. You see growth in certain food categories like organic foods or preservatives, et cetera, or gluten-free, organic, preservative-free, all natural, stuff like that. So in terms of competitive forces, like what our business wanted to do, we were working on a national drugstore chain that was competing with like other, standard national drugstore chains, and competing with like the Walmarts or of the world or the Sam's Clubs of the world. And we realized that some of our shoppers were buying health and beauty products in our stores, but they were buying specialty products that had those unique attributes that you saw in food, like all natural, organic, preservative free, gluten free, in specialty retailers because they weren't finding them at a Walmart, Sam's Club, or our retailer where they were buying their health and beauty products. And so we saw an opportunity to offer those premium or differentiated items in our stores because that would give us a competitive advantage over what are our standard competitive. So we said, all right, that might be an opportunity for us. As far as determining market size and market share, you can look at this a few different ways. You can say how many people are buying some. You can establish your market share goals. You can look at competition in terms of who has the greatest share of a particular market percent. One of a great type of research we have is called BizMiner, and we can run a market report that will show like large business, mid-sized business, total market size in terms of dollar and number of competitors for any particular industry, like fast food restaurants in like Northwest Arkansas or total US. So you can see the total dollar volume for a market. And that's really important to understand as you're looking at like standard revenue for a small business, total revenue in a certain area, what's your target revenue you need to get in order to support your family or compared to the size of the investment you need to make to the business, what you can afford, and really understand all those numbers together. Something else you need to understand, like at one point I thought about starting my own consulting company when I made the transition from corporate America into this. The reason I decided to do this job, I was like, okay, great. I want to get into consulting at this point in my career. I kind of just decided I was kind of done with corporate America, and I thought about starting my own consulting. And this just kind of opened up at the right time because I really decided I don't want to do all of the other things that I'm going to have to do outside of just consulting. And so that is one of the things you need to realize, that like, there may be something that you're really passionate about doing, but you are responsible for everything else. And you can either do it yourself or you can outsource it. When you're thinking about outsourcing it, you have to bake that into your financials and really understand, can you afford it? There are some things that have to be done well. Marketing is not something that you can slack on. You have to invest in order to build the business. And that may look differently, whether it's hiring a salesperson and maybe you're buying business cards and you're paying for dinners. Depends on whether it's a certain kind of B2B and a certain kind of industry, or it may be a lot of social media and some other things. It really depends on the business and your target market. And then managing your finances. And that doesn't just mean like bookkeeping. That means financial analysis, et cetera. And so those are two things that like you really got to have a handle on. And so that's with marketing, that's not only just kind of deciding what you're going to do, but you're developing a brand strategy, a marketing plan, a marketing budget, and then you're executing all of those things. With the finances, like I said, it's the bookkeeping, it's paying the taxes, it's regular financial analysis. And so you're either responsible, you're definitely looking at it. You're either doing it or you're paying someone. So you've got to figure out what the budget is. And then in addition, it's always paying attention for, are we doing things efficiently? Are we doing things profitably? Are we doing things the right way? You've got to be in the business or have a really reliable, trustworthy manager that's in the business that is 100% communicating with you. I like to use, and I'll try to go through it quickly. Everybody that's, the two people on this call that have worked with me for a long time, I've heard this 1,000 times and are probably ready for me to give a new example. But I like to make these really big fancy kale salads that have like 9,000 expensive ingredients. No restaurant in this town could make it profitably enough for someone to pay for it, honestly, because these things are like $40 to make, a batch that will serve, I don't know how many. Anyway, so say you're a restaurant and you've got a great regional distributor that you're able to make these salads with a profit margin that allows you to price them for a consumer that isn't like, okay, I'm not going to pay that much for a kale salad. But you're finding out when you start talking to your chef or your kitchen manager that half of the kale itself, or the Brussels sprouts, I like to put Brussels sprouts in one of my favorite recipes, are wilting. And you're having to throw them away. So really that profitability is cut because of the waste. And so maybe you need to reevaluate and pay a little bit more for a local supplier. And then you can spin that into a marketing positioning, like we source local. So that's just something that you may be looking at. Or can you combine someone's role in a business without overworking someone by bringing in new technology that makes a job more efficiently? And maybe you have to make an investment in that new technology, but it makes the job easier and more efficient. So the front end costs, but your labor costs over time are lower. And you're always the one paying attention to that constantly. And then the other thing is placing the right person in the right job. This is not just about the right skill set, but in small businesses, you've got to have like a team atmosphere. We are a small team in our organization. And so we all have to have like a very much a team mindset. The dynamic of like the growth, like how, like just how our team operates. The culture is really important because we're a small staff. And so, when you're hiring and stuff for your business, there's a lot to consider there. And something else is like, I've worked for people who hated managing people and they were really honest about it. They were great people. And they had the humility to know that. And they didn't like managing people. They weren't necessarily bad, horrible at it. But you need to really think through, is this something I want to do? Managing people is a lot of responsibility. In order for people to be happy at their jobs, they need to, for whatever reason, enjoy working for the person. So whether you got to read a lot of books, get a lot of training, have someone coaching you, you need to be able to do that. And so that's something and it's a lot of responsibility. I always joke, I'm like, I don't want to be the person in charge because I don't want to check emails on vacation. So, I mean, there's more to that, but, those are a lot of the things that you need to consider if you're going to be, running the show. Um, as far as the money goes, and this is where we can really, really help, like we can have a lot of those conversations with you to kind of help you make those decisions for sure. But this is really where we have like a really great template to help you think through, okay, financially, is this a good decision? First off, we have people go through startup costs, and initially we can get some rough numbers. That is not what you will go to a bank with. But we can get some rough numbers on startup costs, to find out, okay, is this going to cost you $100,000 or $1 million to start up? Okay. And then you need to know how much money you have that you can put into this. Okay. Like, a bank's not going to do 100% financing. All right. So if you're planning on financing, you're going to have some skin in the game. Okay. Then we can help you build out financial statements. We've got a great template that just requires data entry on your part. And so that's startup costs, what you can invest, projected revenue. And I will say, when you project your revenue, and we've got detailed, like I said, we've got a template, you need to have, and we can help with this with market research. I did some sales forecasting in my previous life, and we would sometimes call it wizard math, but you have to have some legit analytics behind those numbers. You can't pull sales numbers out of the sky. And we've come up with lots of creative ways to come up with projected sales, but it needs to be realistic and based on some kind of data, or you're just shooting in the sky. And all that information will create profit, profit numbers, and what we call profit and loss statement, if some of you are unfamiliar with financial statements, and then a cash flow statement. I like to look at cash flow statements the most because it's kind of like like your paycheck and your monthly expenses, how much money is left over at the end of the month, and then it goes over to the next month. And we always like to have a little bit of cushion to go over to the next month because you're going to have some added expense, the following month. And then you need to figure out, where are your additional funding? So like, where are you going to get the money? Is it, family members? Is it other like partners in the business? Is it bank financing? Where else? A lot of people think there are a lot of grants out there. I won't tell you that there's nothing in terms of grants, because that's not completely true, but it's very competitive, and you can go down a rabbit hole. And I have a really specific way of helping people with grants. But if you have the notion that, oh, there's so much and they're easy to get, that is also not true, but it's also not true that there's nothing out there. Okay, so if you go through that whole process and say, yep, there's a market. Yeah, I got the funds to do this. Yes, I want to do this based on all those things I now know that I am going to have to do. Then all right, it's time to start putting together a business plan. And so you will already have done a lot of the financials, which will be a part of this, and I'll go through at the end. But the narrative, which will be in like a Word document. We have a great template. I always have my clients do this. They'll come to me with stuff they find on Google that I have found require, about 5 times more work, and include stuff for sure that banks don't want to read. And people will ask me, how long does a business plan need to be? There is not a number of pages on a business plan. What is important is the content that needs to be there is there, and then it is concise. Now, if you want for your employees to have vision statements, mission statements, if you want to do in a strategic plan, a SWOT analysis, or as you are going into your business plan, a SWOT analysis, stuff like that, that is fine. But in our business plan, we don't include that because it really needs to be very straightforward, and the experience, the content needs to be there. But as far as writing the document, does not need to be this like completely overwhelming thing. So the first piece is products and services. You need to give a really detailed explanation of what your products and services are. And this is also really important if your offerings are not very easy to understand or familiar. You have got to put it in layman's terms, because your audience, whether it's investors or bankers or even family or friends, need to understand it, either because they're not at all familiar with the industry or it's very technical. Like I've had people send me things that I'm like, do you have a video? This doesn't make sense to me because I have no education in this field, or you're using a lot of terminology that's just only you and people in your industry understand. So you got to put this in like, not necessarily 8th grade level, but in some terminology that just explains the nuts and bolts of what it does, and then get detailed. Like you can't say, I have a coffee shop and we offer coffee and snacks. Okay, what kinds of coffee and what types of snacks? Are we talking about popcorn or croissants, bagels, and an assortment of sweets, chocolates, and are these prepared or on site, or are they outsourced and brought in, etc. And then also, where are you offering? Like for us, an example, we had the gluten-free, organic, all natural vitamins. We sold them online and in office. Then you also need to describe your pricing strategy and structure. For us, with the vitamins, they were more premium priced compared to the regular vitamins in the store, and they were priced by the unit. Gasoline, for example, you buy in bulk. That's bulk pricing. So you really need to outline that. It doesn't have to be a menu or every single thing you sell. That does not have to be priced out in the business plan, but we need to understand like kind of where's the strategy. Is it competitively priced, like the same as everything else in the market? Or is it the value offering, or is it a premium? And then is it unit price, bulk price? Do you have packages, etc.? Then this is also a really key component is market. So I've got a great template that I go through with my clients. It's really important that you understand who your target market is. Everyone is not a thing in business. You're going to have specific groups of people that you want to direct your business people to. So for us, with those premium vitamins, we were looking specifically for the people that chose those attributes because they were eating that way. They valued for reasons that they believed those food attributes and those ingredient or lack thereof were important for health. So we built a brand strategy around that. We created a brand that focused on lack of those ingredients because we believed that people didn't want those. In a competitor analysis, I've also got a template for this. You want to do an in-depth, detailed review of your competition, history in the market. What do they present as their point of difference or their claim to fame that sets them apart from the competition? What is their pricing strategy? What are they using as their marketing tactics? What are their product offerings? What is their pricing? All of those things. I really tell clients, got a template, and then I tell people, I'm like, really word vomit on the competitor analysis and we'll weed through it. And part of that is we use the competitor analysis to help build the brand strategy and figure out where is your competitive advantage. As far as the marketing and sales strategy, that is how we'll decide what is your marketing plan. How are you going to market? We'll look at the industry. We'll look clearly at your target market and say what is important for us, because we were combining target market marketing according to our brand strategy, using language that appealed to that target market, as well as using our retail strategy marketing. Like we did a lot of couponing. There is pricing strategy marketing. And then we had our creative strategy, which was what you put into your marketing, your advertising strategy, the language that we used. We will use supporting market research to make all of these decisions. In addition, one of the best ways we can use our market research is to make location decisions. And just use this example because we can pull like vitamin usage or consumption, I believe, in our market research. If we find out only 1,000 people have bought vitamins in the last 6 months in a certain area, and there are 6 retail locations that offer vitamins, that's not a good spot for you to put your specialty vitamin store, right? Because there's just too many competitors and not enough consumption. So we can look at research, and that's really important. Location makes a big difference. The next piece is the industry. You want to dig deep. It's kind of like the competitive analysis. How are companies marketing themselves? That's really important to understand because there's kind of industry standards for how you market. I worked in another industry where contests were a big thing. And like, is social media really big? Is community engagement really big? Like, that's a big thing in Northwest Arkansas. That's more locally. It's a very philanthropic community here in Northwest Arkansas. You also want to look at finance and regulation. For example, vitamins are not FDA regulated, but they are heavily scrutinized because there's not clinical research on vitamins. So you really have to watch the marketing claims you can make. You also need to look at finance. For example, I worked for a company where state taxes were different in the industry everywhere, so that affected pricing strategy. Business challenges. I at one point interviewed with Duracell, the battery company, and I remember thinking, this was not something we talked about in the interview, but I remember thinking, okay, it's not like nothing uses batteries. Like toys often use batteries. So it's not like batteries are completely disappearing, but a lot of things are rechargeable now. So I just remember thinking, gosh, they've got to work hard on innovation. And then industry opportunities. You've got to really identify what are the big opportunities. So for us, it was that those food trends were really translating to vitamins. And so we took an advantage of that. Then operations. This is really key. I always say it's people and processes. So you're going to name the people in the business, what their qualifications are, what they will be doing, what the plan is for paying them. And then probably most importantly, is how is this ship going to sail at a very granular level? I've never had anyone say they hated doing this, but it's very tedious, but it can really help you figure out a lot of other components, including the financial component of the business plan. When you lay out, okay, what are we going to do day in, day out with this business? And I have people literally do, like we'll say it's a restaurant, open to close. When are the counters going to get wiped down? How's the cash register going to get, reconciled at the end of the day? When is the coffee going to get done? Because not only do you figure out who's going to do what, when's what going to get done, but you may figure out other things that you need each day, which can help you figure out your financials. But you need a plan for opening day. And week 2, you may totally decide, okay, this isn't efficient and do it differently. I mean, that's the nature of small business. But and especially if you're going in for bank financing, if you come in and don't have a clue on what you're doing, somebody's going to be apprehensive about giving you money. And the final piece is the budget and financial plan. And I went through our template and like what we do. Again, it's the startup cost, but like this is where the numbers, if a bank sees round numbers, it's a very quick, do you actually have these numbers? Like I went through this with a client. She didn't realize she needed to put the dollars and cents. She had them, but I was like, this has got to have dollars and cents in it. So you need to have exact numbers of those startup costs. Your monthly expenses need to be like nailed down. And then your revenue, like I said, needs to have those specific analytics. You definitely need like contractor estimates, know who your suppliers are. You'll need to lay out like where you're getting all this stuff, make models, very specific things. All that needs to be figured out. And that is going to present projected financial statements. The executive summary, there's some specific things here that you'll include, like a company description, what's the legal entity going to be, where is it going to be located, who are the owners, and then it's a summary of the plan, like a quick overview of the market, of the industry, products and services, financial plan, all of those things that you just go through in the business plan. And this should be one, max 2 pages. This is so somebody can read through this and say, yeah, I want to read more, and you want to keep it short and concise. Just some other things you want to consider is insurance. And one thing to remember, you do want to talk to a small business insurance agent, and this is, you're going to make the decision based on your risk tolerance. But it is recommended that you at least talk to someone. You're going to have the same conversations that you would have. Property and casual, this covers your own property and casual. General liability, this covers damages to others. Product liability, same thing. This covers like damages by your products to other people. Workers' compensation, somebody gets injured. Business interruption, like we just had the tornado. This covers loss of operations or any expenses that you may incur because of lost operations. And then key person insurance or life insurance if a major player in your organization loses their life. And these are like the details and nitty-gritty of this is what you'll talk to a small business agent about. I don't have any licensure in insurance, but again, you'll talk to them, and then it's about your risk tolerance, just like you do with your homeowners or your car insurance. You figure out what you want to do. Personnel, this is really important. You don't want to get into a labor battle with the Department of Labor or Human Resources, issues. You need to understand the differences between employees and independent contractors and make sure you're doing that correctly. Like I'm a W-2 employee with the University of Arkansas. I have, pretty set hours. We have some flexibility. But for the most part, like I don't work weekends unless, I really want to get with a client or something, but generally like I don't work weekends. For the most part, this is 8 to 5, unless I want to work out some flexibility. I get a W-2 each year. There is a scope of work and what we do with our consulting that like I built the skill set and have pretty straightforward guardrails in what I do. I think like if I worked for a corporate CPA firm or like an accounting job at the University of Arkansas, it would be much tighter because the work that we do is so unique to the client. But like the university supplies me with my laptop. We have an office that the university pays for. We're an independent contractor. They bring their own supplies. They decide how they work. They figure out their hours. There's some other specifics, but you got to be really careful about that. And then they are taxed in a different way and get different tax forms, etc. You really need to nail the practices for interviewing, hiring, and firing. The discrimination stuff can get into areas like that if you're not properly doing that. Personnel manuals, employee handbooks, those are important for guardrails on how people need to behave in the workplace. They're also helpful so people kind of know what they're doing. I think, we all feel a little bit, and I even consider myself a blank canvas person. Like I do better when I have looser guardrails. But I think we all feel a little bit better when there's some just kind of straightforward guides, especially when you have W-2 paid hourly wage workers. So they just have some guardrails. And then employment or temp agencies are really helpful if you are looking at a lot of employees, so that you're not spinning your wheel looking at worker resumes that are not at all a fit for the skill set you're looking at. Home base, you definitely need to call the city where you work, planning commission, to make sure that your home or your POA to make sure that your home, if you're going to be doing a home-based business, is okay for home use. You don't want to get into a problem like that. Like it depends on the business. If you're going to have like massive like UPS trucks or like some POAs are not going to let you park a huge trailer with like lawnmowers and stuff like that in your driveway. It really depends on the business. So you need to make the call. There are tax advantages of business use. I don't do these calculations, but you can write off like square footage of your house and like percent of utilities based on usage. You do want to contact your homeowners insurance or renters to make sure that you are properly covered. You need to think about like, do you want your home address on your business cards or your telephone? Like those are things I would not want people to know if it were me personally. But it's up to you. Marketing, this is really important. We help with marketing and branding, and this is really key, especially in very competitive markets. You need to stand out, you need to have a strong positioning, and this just tells people what about you makes you different and better than your competition. And you can't take a shotgun approach to your marketing plan or your brand, and you can't just kind of be all over the place, or people don't really understand what's different about you, especially if you're in a very competitive market. You need to plan your marketing and have a budget for it, or it just turns into chaos. And this is really important so that you are marketing properly to your target market. It's also really important to have a website. A lot of people just want to do social media and work with that. If you're starting with low funds, and you need to save up 2 months until you get revenue, okay, I'm not in the business of telling people to go into, massive credit card debt at 18%, to do something right away, but there are a lot of really affordable web developers on some sites called Fiverr or Upwork. But like, if I look at Google and I go through and people don't have a lot of information about their business or don't have a website, I immediately scroll to the next one that does, because I'm like, oh, I'm not sure about that. Or like, is it legitimate? Or like, okay, they just don't seem that professional. Social media platforms, awesome. Very affordable way. You can get a lot of growth if you're active and you do it right and have the right content. The key is use the appropriate platforms for your audience. My dad is 73, loves Facebook. We were laughing so hard because he did a story like maybe, I don't know, a few weeks ago or something. And we were like, oh my gosh, dad's really getting it. He's doing like stories now. He doesn't even know what TikTok is. Okay. Right. So like if you're marketing, and some 73-year-olds might, if they've got 20-year-old grandkids, and they're showing them, he doesn't. My niece is 5. But it's really, my point is, it's really important, like B2B, you want to spend a lot of time, business to business, you want to spend a lot of time on LinkedIn, for example. Also, don't underestimate the importance of networking. I sit on a committee and have for 8 years with the Rogers Chamber, and those are really valuable depending on the type of business you have. You want to focus your networking. Again, it's like marketing. You don't want to take a shotgun approach. Depending on how if you're very extroverted, getting around and networking can be fun, but you probably got a lot of work to do as a small business owner. But there is still something to be said with going out and shaking hands and meeting people in person. They really get to know you. So it is, and there's some paid networking groups. There are free networking groups, but don't underestimate in this digital world the value of going and meeting people face to face. You just want to be strategic about it and make sure you're using your time well. So I will turn it over to Cole, who's going to talk to you about all of the legal stuff, which I do not even touch on. I chose not to go to law school, so he did, and he's got all that fun stuff.
Thank you, Lori. Let me share my screen. Can y'all see my screen now? Lori, does it look good to you? Okay, cool. All right, so as Lori said, I'm an attorney. I do mainly transactional work at Wright, Lindsey, and Jennings in our Rogers office. So luckily not too far from Lori and their team. I would just thank you, Lori, for having me as always, and I would just encourage everybody here to utilize that resource as much as you possibly can. I mean, it's incredible how many people you guys are able to help, that we kind of get to see from afar or sometimes deal with personally. So great resource. I would encourage everybody to use it. let's see if I can get the slide to advance. There we go. All right, housekeeping, I'll just say that this is all general information. This is not personal legal advice to anybody. You should totally engage your own attorney or speak with your own if you already have one. And with that out of the way, so generally what we're going to talk about today is just legal and tax issues. Kind of assuming it, almost to build upon what Lori said, assuming that you've explored the viability of your business and all things in that realm out of the way that you want to move forward. This just kind of discusses things that you need to think about on the legal side, on the tax side. Some are intertwined, some are different, and I'll try to do my best to kind of bifurcate those ideas, but sometimes it's pretty complicated even for professionals. So we're going to talk about entity structure, just tax. I don't know if we'll have time to touch on the investment stuff. That's probably a little bit too complicated to get in a deep dive in today. But I mean, the fact that you guys are here today is shows that you're on the right track to thinking about these things, and you're not just kind of flying blind into a business, not really knowing what's going on. So why should I care? I mean, the main reason that most people form a business entity is to protect their personal assets. If something goes wrong, if you get sued in a business, you don't want your personal residence or your family, to be subject to liability. That's just kind of, I would say, the main reason that most people want to, and that we encourage people to form a formal business entity with the state. Ease of administration. If you have business partners, it's kind of a little bit of a business pitch, but you can pay for an attorney on the front end to kind of document a clear process for disputes. Everyone's on the same page at the beginning, and everyone's friends, and inevitably things happen, whether it's friends or family or just a business partner. And it's extremely important to have processes in place that if that time comes, you can point to a document and say, we've already discussed how we're going to deal with this. And just, it helps you to avoid litigation down the road, which is going to be, hiring an attorney to draft these documents is not cheap, but a litigation is even more expensive and can be protracted for years in some situations. Transferability of ownership. So kind of on the same line of thought as that, a lot of people start with with business partners that they think they're going to do this forever, and then inevitably, people go their separate ways. Someone moves, someone takes a job. So you can kind of dictate those things on the front end. If someone gets a divorce, you might not want to do business with their ex-spouse anymore, and so we can, or someone passes away, we can kind of put things in place that dictate what happens in those scenarios. Managing cash flows. It's really important to understand, contract terms that you use in your business, being aware of those terms, tax consequences, and just basically how all those things interplay. Especially when you're looking for financing, which Ryan will talk about. It's really helpful to, have a good understanding and have proper documentation of that when that time comes. And then finally, protection of intellectual property. It's really important for a lot of businesses, not as important for others. But if you have employees or developers that you're wanting your company to own that intellectual property. So you can put agreements in place with those developers or those employees or independent contractors, whoever they are, that basically whatever they create, in the scope of their work for you is owned by the company. Especially if you end up wanting to sell your business, that's extremely valuable that you actually own that IP and that you're not just licensing the right to use it, because that can be a very valuable asset or a huge hole in your company if that time comes. So the biggest thing that we'll kind of talk about is the structure of your business. The first two, a sole proprietorship and at least a general partnership, are really the lack of a structure rather than an actual structure. Corporations and LLCs is probably what I'll spend most of my time talking about. Those are creatures of statute of our legislature. They passed laws that created these and said that they exist, and so there's certain formalities and certain benefits that come with those. And so, generally speaking, we don't ever advise people to. I mean, there's nothing to stop you from from creating a sole proprietorship or a partnership. You don't have to form anything with the state, but there's really no benefits either. And I would say that one of the biggest takeaways, if not the biggest takeaway from this today, is that you really do not want to be a sole proprietorship or a general partnership, and I would highly advise avoiding that at all costs. So sole proprietorship is here's little Timmy. He's got a lemonade stand. He's doing this by himself. He doesn't have any business partners. He didn't talk to us, so he did not form an LLC. He is a sole proprietor by the definition of the law because he's a person engaging in business activity for profit. Timmy and his business are not separate, so it's all one and the same. His assets are at risk. If his lemonade poisons the neighborhood, somebody in the neighborhood could sue him for his bike and his card collection and whatever he's got. He's got no protection from that. Benefit is, it's easy. You don't have to really do anything formal. So it's easy to create, easy to administer. There's really no rules, but there's also no benefits. General partnership, basically the same thing, except there's 2 or more owners. So now Timmy has engaged 3 of his friends to join him in their venture. And so now these are 2 or more individuals engaged in business for profit. That's a general partnership. Again, it's easy and cheap to set up and administer. There's really no formalities. Commingling your assets doesn't really matter in this scenario. However, now the fact that you have no liability protection gets even bigger, because now that you have partners, not only are you personally liable for your own acts, but now you're personally liable for the acts of your partners. So if Timmy runs off and goes to the store to get lemons and gets in a car crash and gets sued for that, well, then his partners are now subject to potential liability for that. So you really just do not want to be a general partnership if at all possible. So the rest of this presentation is really about legal entities that are designed to protect your personal assets. The first of which is a C Corp. This is the old tried and true form of business. LLCs did not exist in Arkansas until 1993. That's when our legislature passed the first statute. We have since, in 2021, kind of overhauled that and created new statutes. But the fact that they didn't exist was, the reason that most businesses back in the day were formed as C Corps. There's a lot of laws, a lot of rules and case law that have developed over time in this area. So that that's a positive. So you begin a C Corp by filing articles of incorporation with the Secretary of State. C Corps they're pretty formal. And let me back up. A C Corp is technically a tax status, but a corporation is the state law entity. And so you'll throughout this, you'll hear me discuss the state law entity type and the tax treatment, which sometimes borrow terminology, and so I'll try to keep it separate as much as I can and still make sense. But corporations they have a lot of formalities, so they're not practical a lot of times for really small businesses, especially somebody with one owner. There's kind of a separation of powers where there's shareholders who are the owners, and then the shareholders basically are required to meet once a year to elect the directors. The board of directors handle a lot of the important decisions. They appoint officers, which may be president, CEO. You have flexibility to secretary, treasurer, things like that. And so each body has its own rights and obligations. LLCs are much more flexible just because they don't have a lot of these formalities. And so, that's why most people are going with those these days. Bylaws are a boring document. They're an administrative document that deal with, when meetings occur, how you handle certain things, what's voting, what constitutes a quorum for a vote to take certain actions. You do have limited liability here, which is a benefit of corporation, obviously. The only caveat to that is, that's not to say that you will never have personal liability, because a lot of banks most banks are going to require if you need financing, they're going to want a personal guarantee. So that's not to say that you're altering the law with respect to liability protection from a corporation, but you're basically signing a document that says if the corporation is not able to pay, then you personally are on the hook. Most small businesses are not C corps. Big public corporations are. They're all the publicly traded companies are C corps. And a lot of times you'll hear this double taxation. If you talk to a CPA or really anybody, you look it up online. That's kind of the reason that a lot of people steer clear of it. And that generally refers to just the fact that there's basically two levels of tax in a C corporation. So if you have, say, $100,000 of profit in a year, well, the corporation is taxed on that at currently a flat 21% tax rate. So say, you pay that at the corporate level, you've got $79,000 left to distribute out, to shareholders. So then if most corporations are not going to distribute out all their profit, but say just for the sake of from argument that you distribute to the rest of the profits to the shareholders, well, then the shareholders pay tax on those distributions at their personal tax rates. And so generally these are going to come in the form of a dividend, and those are right now a qualified dividend. Most dividends are taxed at capital gains rates, so it ends up being around the 35% combined rate, which isn't a huge difference right now. But if certain changes don't happen at the end of 2025, then some of these rates may change, and it may be a bigger difference again. But that's just kind of to touch on that, because most people hear the concept of double taxation, and it may not always make sense. So S corporations, what you hear a lot too. An S corporation is this is kind of where it's important to distinguish between the legal entity and the tax classification. So S corporation is a tax classification. There are certain entities, an LLC, a partnership, certain entities can elect S corporation status, but if it's an LLC, you're still a limited liability company for statutory purposes for the sake of the state of Arkansas, say, but to the IRS, you are an S corporation. So there's no double tax, so to say, with an S corporation. It's a pass through or a flow through entity, as you'll hear. So the corporation itself they don't pay tax. They basically file what's called an information return. So you prepare all the same information like you would to file a tax return, and then it basically just flows through to the shareholders of the S corp, and so there the shareholders do pay tax at their personal rate, whether you pay it or not, or whether you pay it to yourself or not. You do owe tax on it. So that's kind of one something to just pay close mind to, because not everyone knows that. And so that can just that's important in just planning, your cash flows and setting enough money aside to pay taxes. So, and another distinction here is, so when as Lori mentioned, when you're a W-2 employee, you pay half of, payroll tax. When you're self-employed, you are the employee and the employer. And so you're paying on top of that, say 22% tax rate, if that's your personal rate. You're also paying that self-employment tax. And that can be a big surprise to a lot of small business owners. Because generally speaking, most CPAs will tell you that you need to be an S corp, because you can certainly save some taxes by setting up that way. But as you see, this restrictions on ownership, so that's something that's really important in my practice, because saving money on taxes isn't the only consideration. And there's some pretty stringent IRS requirements on who can be an S corporation based on who are the shareholders. And so, you have to be an S corporation, all subject to a couple limited exceptions, which are far beyond the scope here. You have to be human individuals that are shareholders. For the most part, it can't be entities. You have to have, they have to be U.S. individuals. They can't be foreign. You have to have fewer than 100 shareholders. And so it really gets important to, just kind of think about this whenever if you ever want to sell down the road, you ever want to sell your company, or you want to seek investment, that can be a reason not to be an S corporation, because a lot of investors, a lot of private equity funds, they're going to want to invest through an entity of some sort. They're not going to, want to invest in their individual capacity. So for many reasons, so they can pool resources and, protect themselves. So that's just something to think of whenever you're making that decision. It's an election that you file with the IRS. You have, there's complicated rules with that too, but you generally have, if you're starting a new business, about 2.5 months to file that. You can elect down the road. However, if you make a subsequent election to be an S corporation, you are stuck with that for 5 years. That 5-year rule doesn't apply if it's your initial election, if you do it at the beginning of your business. But there's, another reason to definitely speak with an attorney or a CPA, just to make sure that you're following all the formalities and that you're not missing deadlines, and really that you have your long-term goals, kind of that you're setting up your entity to suit your, your future plans, if at all possible. And there's ways to, change things if things change down the road, but certainly good to think about on the front end. There's another requirement that you have to have one class of stock, so that reduces flexibility. Again, with private equity investment, if they generally want some sort of hurdle that, that if they invest, they're going to want their profits back first, before anybody else gets paid. And it's just not permitted in S corporations. You've got to have the same, liquidation and distribution rights among all shareholders. And finally, owning real estate is not, for tax purposes, is not always a good move to be an S corporation. Again, a little in the weeds, but that's generally another reason that you would maybe not want to go that route. So LLCs, limited liability companies, these are by far and away the most popular business entity used these days. This is what we form the vast majority of the time for our clients. It's a state law creation, and so it's not mentioned in the tax code. Our current tax code was enacted in 1986. LLCs weren't really created until the 90s, and so they're just flat out not really mentioned in the tax code. There's some regulations now, but before. So now you can just file a form to elect how you want to be taxed if you're an LLC. Before, the rules were kind of complicated, but the IRS has really granted a lot of flexibility on that. And there's like I mentioned, there's a lot fewer formalities with an LLC. So you form it by a certificate of organization in Arkansas. There's basically 2 documents: the certificate that forms the entity with the Secretary of State, and then you generally we draft an operating agreement for every LLC that we form. That's the governing document that sets forth everything to do with the LLC, its operations, everything in that realm. That is the most important document. So they're easy to set up. There's much less formality than a C corp. They're less expensive to set up. I mean, we charge like half of what it costs to form a corporation, for an LLC, because there's just so much less documentation involved. So owners are called members, and generally, so management can either be member managed or it can be manager managed. This is generally, it's just set forth in your operating agreement, and it generally has to do with the authority that these individuals have to contract on behalf of the company and bind the company. And so we generally steer towards, every situation is different. We generally steer towards a manager managed, just because it allows you to designate somebody who has authority. And then if there's other members that are more passive, or say you want to grant some employees equity, even just a small amount, to incentivize them to stay on. If you're member managed, you don't necessarily want those super minority owners to be able to bind the company. And so there's things you can set forth in the operating agreement where, that's not to say that managers are the only people that can do anything. I mean, you can put in your operating agreement things like, things that require a supermajority or unanimous approval to protect those minority owners too. And so, yeah, you can be taxed, if you're a single member LLC, you can be taxed as a sole proprietorship, or really a disregarded entity, is a more accurate way to state that, where it basically just flows through your personal income. If you've got multiple owners, you can be taxed as a partnership. You can elect to be taxed as a C corporation if you want to. or an S corporation, you know, assuming that you meet the S corp requirements. Because if you elect that, even though you're an LLC, you're still going to be required to meet those, or else you will not qualify. So as mentioned, I mean, the biggest benefit, or one of the biggest benefits for, you know, a limited liability company is limited liability. Your, you know, your liability is generally limited to your investment in the company. However, it is not absolute. There's still exceptions to limited liability. I mean, for fraud or intentional misconduct, gross negligence, a lot of, you know, self-dealing or conflict transactions where if me and Lori, you know, are two members of an LLC, and I I hire myself to provide legal services, or, you know, triple the rate that I would normally charge. You know, that's obviously not fair, and she could, you know, she has recourse for things like that. So it's not to say that you can just do anything and be protected. You know, there's formalities and you know, just general fairness that you more or less have to observe. Again, LLCs also, you know, you get financing. They're same thing with the personal guarantee. You know, there's plenty of ways that liability is not necessarily limited, but for the most part, you know, assuming that you do everything correctly, it's a great benefit. But you know, limited liability is a gift from, you know, from our legislature. So basically, if you abuse it, and you know, you don't comply with the laws, you don't observe the formalities, you won't get the benefits either. And the most common time that we see that is commingling of assets or expenses, where you don't treat the entity as separate. Then the courts won't either. They will, you know, they'll so-called pierce the corporate veil, which is not near as cool as it sounds. It is basically what I've already said, but say you know, you're paying your personal expenses with the company funds, or I mean, there's a variety of ways that this could go. You just have to be careful and sometimes it seems silly, you know, I mean, it can be the seemingly unnecessary step of transferring money. Say you need to pay a bill or something, transferring money from your business account to your personal account, and then paying that. It not only is it a requirement, it's also it's good accounting practice. You know, it's a lot easier to administer and keep up with your finances if you're observing that. And that's can't stress enough how important that is. So this is really just for the PowerPoint. It just kind of gives a comparison of filings and documents and just terminology of these different entities. So let's see. So things to consider, which I know Lori touched on a lot of this stuff, but you know, the first thing, assuming that you've already explored the viability and you want to move forward, is choosing a name and making sure that it's available. So checking the Secretary of State's website, seeing you can't have the name that's the same as somebody else in the state. And then you know, even if that's satisfied, you know, the Secretary of State may allow you to use a name because no one else in the state's using it. That doesn't necessarily mean that you can use it with impunity from, you know, trademark. If someone else, it's important to do a trademark search, you know, really in the whole country, to see if somebody else is using that name, you know, in your realm of business. That's a practical, you know, limitation on name use, because, you know, I mean, what Cal, my partner that used to give this presentation all the time, he always uses the same example of, you know, you could probably form a McDonald's restaurant, you know, in the state of Arkansas, and you know, you start out and you're not making any money, and nothing really happens, and then when you start to get successful and you want to expand, you start to get a little recognition. That's when you're going to get a cease and desist, you know, saying you cannot use this name. So just because the Secretary of State lets you form something doesn't mean that you necessarily have the rights to use that name. It's generally like the standard is like whether consumers will be confused or not. So I mean, if you form a, you know, McDonald's furniture store, there, you know, the consumer's not going to walk in the McDonald's furniture and, you know, expect to be getting a cheeseburger. So it's just, you know, something to consider as we talked about, you know, determining your tax status. We encourage everyone, if you don't already, to, you know, establish a relationship with a CPA, you know, your accountant, whoever. I mean, extremely important. They're the ones that a lot of times are, you know, are putting all of this stuff into practice, and you know, and filing and hopefully, you know, saving you or counseling on you on how, you know, you can efficiently kind of navigate taxes and you know, generally a good CPA is going to save you as much, if not more, money than what they cost. Deal with them all the time. They are very important in a small business and any size business. And I think it's particularly helpful, kind of as Lori mentioned with insurance. It's really helpful to find somebody that practices with small businesses a lot, because accountants can, you know, they do. There's so many different types of them that do different things. Some of them do huge companies, others just do small businesses. Some do all of it. Just an additional consideration when you're choosing one.
Can I jump in real quick on the trademark piece?
Yeah.
I would just say if there is any bit of confusion in your mind because the impact of a trademark infringement and a cease and desist requires so much impact to change your name, your branding, all the things, very expensive. I would just talk to an IP attorney. They can probably answer the question very quickly. Like if it was me and my own business, I would want the assurance of what will be a quick answer for these very brilliant IP attorneys. So, because we just went through this with a client of ours, and that was my direction. I was like, I would just ask the question, probably won't take them 5 seconds to answer the question, which will probably be a no, it's not an infringement risk, but you know, anyway, keep going. I just wanted to pop.
No, that's a great point. And that's an area that, like, we have IP attorneys that, I don't touch it. I go to them if there's any, I don't understand it. It is not my area. It's very complicated, very technical, you know, and they know it, you know, but I sure don't. And as you mentioned, it can get expensive, and if you have to, you know, if you have to change your name, that can just cause so many changes to have to be made, whether they're administrative or have legal consequence. It's just something else to at all, if at all costs, or if at all possible, just, you know, to steer clear of. So then key questions for founders, you know, whenever you're starting the company, you know, what do you want to happen if one founder leaves? You know, just because somebody leaves a company does not mean that their ownership just goes away. Some people think that. It's not the case. You know, we draft documents to specifically address, these are some of the biggest problems that occur down the road when everyone's on the same page and everyone's working, and then all of a sudden they're not anymore. It's like the entrepreneurship programs, you know, it's very frequent that, you know, people that are owners or founders, they just have divergent interests or lives, you know, over time, that they move, they want to just take a different job. You know, you want to explore what everyone's intent is, if that were to happen. You know, how much time commitment. You don't want somebody doing 80% of the work and owning 10% of the company. That's not fair. You want to, you know, discuss how key decisions are made, day-to-day decisions are made. As I mentioned earlier, you know, you can make some things where, you know, maybe one person has the ability to make a certain decision. You can make other things, such as, you know, extraordinary items like, you know, taking out a loan, selling assets, that requires a unanimous vote or a supermajority, or how you can define that as 2/3 or 75%, or, you know, however you want to do it, but it needs to be addressed. So we draft documents to address, you know, whether a founder is going to forfeit their ownership in a certain situation. Most of the time, it's going to be more of giving the company a right of first refusal. You know, you give the company, if say they terminate their employment, they're no longer involved in the company. Well, then the rest, you know, the company itself has the right of first refusal to buy that person's interest. If the company doesn't want to do it, then you give it to the rest of the owners to, you know, buy a pro rata share or something like that. And then if no one wants to buy it, you know, then they're free to sell or whatever. But it's just things that need to be hammered out on the front end for sure. And then you know, how will you decide whether you want to sell a business? If you know, where it's really complicated is a 50-50 business, because a lot of people, you know, they want to go in as equals. It's two people, they put in the same amount of time and money. It is, we see it all the time. It's really difficult to deal with, and there's a lot of situations that are just really hard to find a solution to. If you don't, you know, if you want to be 50-50, it's not the end of the world, but you need to address it in your documents how disputes are going to be resolved. There's ways to, there's ways to do it, but if you just leave it up to the law, there's not a good dispute resolution mechanism. It's just, there's no good way to address it if you don't address it in your documents. So it's just a further consideration that we see all the time that raises issues. On the tax side, so you got to be aware of a lot of taxes that you have to pay. I mean, it differs with every business, but you know, you may owe sales and use taxes to the state, state and federal income taxes, self-employment taxes we talked about earlier, you know, so Social Security and Medicare, that, you know, the payroll taxes, withholding taxes on employee wages, franchise taxes. You got to pay, you know, $50 to form an LLC, and then you got to pay $150 every year to the Secretary of State just to, you know, maintain the privilege of doing business in the state, or else that'll get revoked. You know, property taxes, plenty of other miscellaneous taxes that just, you know, can't be understated. I mean, you do not want to be dealing with the IRS. You don't want to be dealing with the DFA. It's just, you know, something you want to be aware of, and whether it's, you know, just mitigating liability or just, you know, planning cash flows. There's a lot of different taxes that you need to be aware of. I'm gonna go through some of that. That's just kind of too deep to get into today. Yeah. Another thing Lori mentioned is, you know, employee issues, independent contractor versus an employee. You know, every business has, you know, there can be pros and cons to having just contractors or employees, and there's defining factors. There's factors that courts look at to, you know, just because you call something, you know, an independent contractor agreement, or, you know, whatever you may want to call it, does not mean that it will be respected as such. There's many factors that go into, you know, that determination. We have attorneys that do employment law. We have a whole team dedicated to it. That's another thing. I get into tax issues with it sometimes, but I don't. They look at employee, you know, they draft employee handbooks, they review them. It's important to have policies in place when, you know, when things go wrong, or you know, you want to fire somebody, or you want to let them go, or there can just be a multitude of issues. And so it's important to have, you know, airtight contracts. If certain employees have, you know, really valuable information, or they're really, you know, important to the company, you'd like to, you know, be able to bond them to non-disclosure, or, you know, non-solicitation. If they leave your company, you don't want them to steal all your clients or all your information. I'm sure as many of you have seen, you know, non-compete clauses have always been a huge part of our practice. The FTC has cast some serious doubt on whether those are going to be enforceable moving forward. So, you know, businesses are definitely starting to try to get kind of contingency plans on how else they can protect their legitimate business interests, you know, outside of non-competes. And a lot of that is through non-disclosure, confidentiality, you know, non-solicitation agreements, things of that nature. And there's just many, you know, contracts that are associated with small businesses, you know, leases, commercial contracts, you know, employment agreements, privacy policies. You know, if you're you know, aggregating data, or, you know, just, that's a whole nother IP thing that I let Meredith or somebody on our team look at a lot. But important to have in place. And shareholders agreement, buy-sell agreements. Those basically dictate a lot of the, you know, the ownership transfer, things that we touched on earlier. But and then, you know, I'll skip over this one because I'm about to talk about it in this one. So really, on the same vein, you know, commercial contracts, and this first bullet point really is more to leases. You know, commercial leases are a huge source of dispute. I mean, I deal with it all the time. People don't really look at them, they sign them, and they have, you know, inevitably something pops up, whether it's a leak in the building, or an insurance issue, or, you know, payment. Like, there's so many things in a lease that cause room for dispute. So having somebody review that or draft it is extremely important, just to kind of set forth, you know, clear understandings from both sides, understanding payment terms for your cash flows. I mean, you don't want to be getting paid every 60 days and you're having to pay your suppliers every 30 days. I mean, that you do not want to be, you know, floating for that period of time. It's just something additional that you need to review and be very, very cautious of. Again, ownership of intellectual property, you want to, you know, make sure that you have protective language in your agreements with developers and employees and anybody else that may be, you know, developing something for you, that you make sure that whatever they create, you know, is assigned to you, the company. master agreements, statements of work, and exhibits. A lot of times there will be, a master agreement and a million statements of work that a company, especially like in vendor world or something, that they're not, they don't correspond well. They conflict, and it can get very, very messy trying to interpret those if something goes wrong down the road. And then the last thing I'll touch on is just, that's really important in commercial contracts is termination. What's the term of the contract? What grounds does each party have to terminate the contract? Are there fees or penalties associated with that? Is there a notice period, that you have to give them before you can terminate? Many considerations and many hoops to jump through. And then non-disclosure agreements, those are really important. That's how a lot of individuals and potential buyers do their due diligence on companies. A company's not going to want to give them all their information if they're not bound by non-disclosure or confidentiality language that prevents them from from disclosing what they learn in that diligence process. And this is kind of just a bullet point list I'll leave to the slides, but it's important to set forth not only who can view the information, but what is considered confidential. Something further to be aware of. I haven't scared you off enough. And then finally, shareholder and buy sell agreements. We pretty much already talked on it, but this gives a roadmap for the founders, and thinking about what may happen with their shares or their business partner shares whenever they get divorced or they pass away or they just want to sell on their own. Very important to set forth in an agreement or a separate agreement. There's a variety of ways to address it, but really important. And with that, I'll turn it over to Ryan, and thank you all for listening to that abundantly.
I just want to jump in real quick based on some of the experience I have with this. With the commercial lease stuff, be sure you're working with a great commercial leasing agent. There are, just having worked with clients, there are crazy things like with chiropractors, for example. I've worked with a ton of chiropractors. Like you can't have x-rays in certain properties because they're like the next door neighbor, for example. And then think about, like, Cole is really trying to drive home this stuff about have a plan if the things fall apart. It's like a prenup. I mean, like that's how I always liken it for people with like worst case scenario. It's like a prenup if you don't want somebody to have all the money and you're older and you built a lot of wealth. So, I mean, Cole explained all these things really, really well, but just from the years of working with clients, I just wanted to drive those few points home, like get a great commercial agent. And then I would suggest having an attorney review those commercial leases, just because, I mean, like we don't. And they can be very complicated. So that's my 2 cents. Anyway, I'm not as smart as Cole, but I just wanted to drop in my 2 cents.
Thanks, Lori. Thanks, Cole. I will echo some of Cole's comments. On the financing side, a lot of those documents that Cole referenced, the operating agreements, the bylaws, buy-sell agreements, we see those, and sometimes customers are well aware of what's in there, and other times customers are going, "What do you mean my wife has to sign as the VP? Whose idea was that?" And I say, "Well, it was yours. It's in your own operating agreement." So do take the time to work with your counsel as you're putting your operating agreements, your entities together. Think through those things. Ounce of prevention is worth a pound of cure in those. Like Cole said, it's much easier to figure them out on the front end. I'm going to talk through financing and hit on some of the high points. One of the main things that I would like to just highlight before we get into the slides is that banking is really a relationship. The earlier you can bring a banker into a conversation, let them know that you're working on something, let them know that you're talking with Lori and working on a business plan, putting together an entity, the better off you'll be. That way, if there's questions or things that your particular banker or financial institution needs, you can be working on that and not have to go back and redo some of the steps that have already been done. But From a financing standpoint, there are a few different sources of financing that are available for businesses. Bank financing is the one that usually springs to mind. That can be with or without an SBA guarantee. We'll talk more about the SBA or Small Business Administration in some subsequent slides. But they are a great partner for banks to offer financing to businesses that are in that startup or growth phase. Bankers tend to be backwards looking, saying, hey, show me your last 2 or 3 years tax returns. If you've got a new idea, if you're Lori and you're selling kale salads to people, but you haven't sold one yet, those 2 years of tax returns aren't going to show the bank very much. That's where the ASBTDC comes in and helps you build a realistic forecast and projections, and within the SBA, they can take a look at that. Your savings are going to come into play. In the banking industry, we call it skin in the game. There's not much 100% financing out there for any customer, and for the small business customer or startup, it is non-existent. So if your savings need a little help, gifts or loans from family or friends can come into play. There are equipment leasing companies. An example of this would be, let's say you wanted to start a gym somewhere. One option is to come to the bank and say, I want to buy all of my gym equipment using a traditional bank loan. And we're going to say, okay, well, we probably need some money down, and let's look at this potential SBA. But there may be financing through, Nautilus or some of these other fitness companies that allow you to borrow directly from a manufacturer of the equipment. That can come into play in a variety of industries, but can be a viable option as well. Venture capitalist, I think Shark Tank on this one. We have some local options that are similar. On venture capitalist, you're usually giving up some sort of ownership in exchange for the capital that you're getting. So it's a value proposition you have to kind of think through yourself and determine if that's worth the trade-off. And then crowdfunding is just achieving financing of a building business by using a bunch of small contributors. That can be people buying small stake in the business. That can be something where you're promising some sort of benefit or exclusive offer to people that are helping you get going. Maybe they get in a first look at some of the new product that comes out or something like that. Most of the time, you're going to see the top 2 bullet points being where the majority of financing for your business will come from. Just some general comments about financing. Obtain a commitment from a bank before you sign any binding agreements. Before you sign your building lease, before you order materials, you don't want to assume that you're going to be able to get this, generate some liability for yourself or your newly formed entity, and then figure out, oh no, actually don't have the capital to make good on that. That can put you in a precarious situation. Lori talked earlier about grants. They do exist, and people get them, but to think that they are easy or non-competitive or just kind of lying around on the ground is not accurate. There are some things, particularly with government grants, that can help. Being a majority woman-owned or minority-owned business can put you in preferential consideration for some of those programs. But I just worked with 2 different companies that thought they were checked all those boxes and were getting ready to move forward with some grants, and found out that it was close, but they were not selected. So grants can be a good supplement, or definitely worth exploring, but they're a labor intensive and very competitive process. And then don't expect 100% financing. It's just not out there. From a bank standpoint, from a SBA standpoint, it's just not what you're going to find in the marketplace right now. So if you're in that planning stage of, oh, I've got a business I want to launch, as you're thinking through some of the questions that Lori's going to be working with, creating a plan to make sure that your personal finances are in good shape and that you are putting some money back can definitely put you in a better situation. SBA loans, again, the SBA is the Small Business Administration. It's funded by the federal government with the purpose of helping small businesses qualify for financing that they otherwise wouldn't be able to get. What the SBA does is provide a guarantee to the bank that originates the loan that limits the maximum amount of loss or risk that a bank takes. So there's a few different programs. The 7A program is probably the most common. It's flexible. It can be used for starting a business, acquiring a business, expanding a business. SBA Express is, I believe, up to $250 right now, $250,000. It's very similar to the 7A in terms of the requirements and the process. The difference is the guarantee that goes back to the bank. So your financial institution should guide you on that. Shouldn't be something that you have to make that determination. And then a 504 is a program that comes into play with longer term fixed assets, mainly land and buildings. We're doing a couple of these right now for, an existing dance studio that's outgrown the space that they were leasing. So they think, okay, well, let's build our own building and owner occupy it. That's a qualifying 504 loan program. They do have long-term fixed rates on the 504 portion. So that is an advantage that the SBA has to offer. As you're looking at your initial request for financing, Lori touched on this, but business plan is important and details are important. It is easier to ask for additional money on the front end and then figure out that you don't need it than it is to go back and say, hey, I borrowed $100,000, but to get up and running and generating revenue, I need another 20. Now we're back. That's a much more difficult situation for the bank and for the borrower. And if you've got SBA in there, it's one more thing to kind of work through. So be detailed, be thorough in that, and give yourself some wiggle room. Banks and SBA allow for contingencies in budgets. They allow for working capital considerations, so include those in there. Same deal when you're working on your projections, gross sales, operating expenses, net profit. Lori mentioned outsourcing. She's correct that outsourcing your payroll or outsourcing some of your marketing, it does cost money. It's another one of those cost benefit analysis that you have to do, because if you're doing all of the things, sometimes you don't have time as the business owner to go do the most important things. Recently worked with one of my customers to put his lines of credit for operating on a sweep so that he doesn't have to worry about moving money back and forth. Introduced him to someone that was taking care of his onboarding of new employees, making sure that the workers' comp and stuff is done. None of those things are cheap, but he said, man, these are the best things that I've been able to do, because now I'm in the field working with my customers, getting new jobs in, and instead of worrying at night, oh, did I move enough money? That's taken over. Oh, hey, did I get that form? Someone else is taking care of that. So those are things that, to Lori's point, think through and include them if it's appropriate. Including that cash flow projection. This is another reason to bring people in early. If it's SBA and it's a startup, they're going to want monthly cash flow projections. Luckily for you, Lori and her team at the ASBTDC can do that, and I think have helped several of the folks that we've worked with in conjunction with them really think through that. A lot of businesses have seasonality. If you don't plan for that, you can find yourself in a pinch where there's no money to pay bills during the slow time, even though if you can make it 2 or 3 more months, the faucet's going to turn back on. So planning that need for working capital is huge. Summarizing your history in the industry, giving me your resume. I would encourage you to brag on yourself. Most business owners that I have had the pleasure of working with have a passion. They have a skill set. They do things that are worth bragging about. So, don't be afraid to let us know, because as bankers, when we're selling to our loan committees, to our SBA departments, or to the SBA at the regional level, the more that we understand and know and really are comfortable with you as an operator of the business, that is a key component as much as what you see in the numbers. Did want to circle back to the SBA a little bit, just to talk about some of the things that they do. They do help small business owners obtain financing from a local bank with a loan guarantee. So the bank still has to approve you, but they will help finance or help you qualify for financing that may not be within the bank's normal loan policy. Most of the banks that you work with within the Northwest Arkansas footprint should have an SBA group, but feel free to ask the relationships you already have, if that's something that's out there. You can also go to sba.gov to get information on the SBA. They do allow for longer term financing. Most of the stuff that I'm doing on the bank books right now is on a 3 or 5 year maturity. That doesn't mean that you have to have the loan fully paid off in those 3 to 5 years. It just means that's the longest fixed rate term you're going to get before we go back and review. The SBA is going to go 10 years on revolvers or other stuff, and up to 25 years on real estate. So it's more of a set it and forget it kind of financing agreement. The SBA does have some requirements around personal assets likely to be pledged. Most commonly, that's going to be an assignment of life insurance on an owner and or the key employees of a company. If we're making kale salads with Lori and nobody can make them quite like Lori, but I own the company, there may be a life insurance policy on both of us that would be pledged to the loan. Likewise, if I've got $300,000 equity in my house and I'm trying to borrow $500,000, the SBA is going to say, well, that's a pretty nice house you have there. Why don't you go ahead and pledge that on the loan? Sometimes there's a guarantee fee on most of these programs. It's not always high rates. We've actually seen them be pretty consistent. Just like regular bank financing, SBA loans do consider your credit score and your credit history. 10% cash in minimum is an SBA requirement. For a bank loan without SBA, that is usually 20 to 25% cash in. So it does narrow that gap a little bit, and we can work through that whole budget process to kind of talk through that. What they don't do is make direct loans. They tried that during the pandemic. It didn't work very good. They don't offer grant money. They don't offer low interest loans, and they do not allow for the below notes. Back to that earlier comment around the maturities of 3 to 5 years on the bank side. A few other things just from banking and finance side. We talked about record keeping, but I will echo some of the things that Lori and Cole said. You want to have a good relationship with your bank, keep them informed of what you're doing, and keep things separate. We have folks all the time calling and saying, hey, I want to move this money from this account to that account, from my personal to my business. The reason that they're doing that is just like Cole said, maybe they're needing to pay something or contribute money to their business. By doing it on the bank side, there's a paper trail. You're not piercing that corporate veil. You want to keep a schedule of your business assets, show what you purchase. That will be important for your taxes, depreciation, and things like that. You want to keep your business records for at least 3 years, and I don't know why you wouldn't keep them longer. Accountants, Cole mentioned finding the right one that works with small businesses, and for a lot of my customers, they work with someone that does their taxes. They have someone else that does their month-to-month bookkeeping. That can be internal. That can be a third party. I will say, whatever you generate from financial statements, look at them. It's a world we live in. It's sad, but fraud and in both internal and external is a huge thing. So having an accountant that is helping look at your books helps. Having a separate tax preparer helps, but nothing is better than you looking at your finances every single day. So again, keeping a separate bank account for your business makes that easier, as well as protecting that corporate veil. It's a lot easier to balance your business activity and your personal activity separately than having those things come together. If you don't remember anything else I said, remember this: get to know your bank loan officer before you need to borrow money, and keep your loan officer informed as both you start looking towards financing and then as your business is up and running. If you have a bank that you work with and you're thinking about doing something, go in and talk to whoever you know best. That might be the teller, maybe a branch manager, but just ask them, hey, I'm thinking about a business loan. Who should I talk to? The first place to start a lot of times is a place that you already have relationship, because they know you and you have a history with that institution. But it's also one of those things that is generally worth shopping, finding who you work best with. Different banks have different risk profiles and stuff, so it's definitely a conversation that you want to have and keep going. I will turn it back over. I did see some questions pop up in here, but I'm going to turn it back over to Lori for this last section, and then we'll come back and hit some of these questions.
Okay, what I was gonna add real quick to what Ryan said about record keeping. This is also, okay, so it's really important for your taxes. You are going to spend a lot more money with your accountant if they have to go through chaos. But also, if someday you think about selling your business and you've got commingled finances, it is going to be chaotic, like separating all of that stuff. And then in the case of you wanting to buy a business, if somebody is spending a lot of time or you don't want to share stuff because you've been doing shady things to increase expenses, to have better profits, to save on taxes. And it's not like we see a lot of people doing that. It's just the buy sell situation can be like really complicated if you haven't done that well. So if that is part of your future plan, that makes record keeping even more important. So just a little thing. So just the final, figure out your financing, how you're going to pay for this. If you have enough money, figure out your legal entity, the startup, tax, employer requirements, all the licenses and permits. And again, we can help for that. And then finally, then you can sign all these binding things that kind of bind you to the commitment to do this business, whether it's leases or, the obligation to equipment and signing over things you're going to buy, all that, wait till everything is set in stone. So that's about it. You will get a survey evaluation. Please fill that out. It helps us to know what we need to do better, if there's other things we need to include, all of that. I'm going to stop share here and do the Q&A. And so we will figure out, I'll just go top to bottom. Okay. What do you suggest for a person in poverty with no assets or savings who wants to start a business? Okay, so there are things called CDFIs, which are different kinds of funding institutions that have missions to help certain groups of people that are unlikely to get financing from standard financial institutions like Arvest Bank or whatever, with lower credit scores or fewer assets and less savings. And so what I do is I will have a conversation with someone like that. We'll talk about the business concept and what little assets or savings they may have. And then I will have a conversation with whoever may be in these CDFIs and other organizations just to talk about the concept and say, hey, what do you think about this? Now I have to get your permission because this is a confidential situation to see if that may be a fit, or you can go directly to them. Sometimes it's just easy for me to get on a quick call, but that is one option. I have not seen grants for that, but it's not like it is an impossible deal. It's just a different funding source. In addition, sometimes there are situations where I have clients, because I have clients fill out a banking questionnaire before I meet with them, so I can assess, okay, what kind of funding situation are we looking here? And sometimes the situation is, okay, this is not a bad business idea. This is okay, maybe later, where you go talk to Credit Counseling of Arkansas, which is, I think, down in North Fayetteville somewhere. And you work with them to figure out what debt you need to pay down and what savings you need to do each month to make this happen. And maybe it's a year from now, if those funding sources are not an option. And we keep working together, slowly work on a business plan and stuff like that. And it's just a maybe later. So it just kind of depends. So it may be now you can get the financing, or maybe we work on not never, but a little bit later. Okay, the second question is, would a person obtain the business license first before registering for the LLC? Correct me if I'm wrong, Cole, but I think it's get the LLC, then the business license, because the business license is going to be tied to the LLC, like the name of the legal entity. Okay, would I be able to use a PO box for LLC business? Okay, so a new transparency law. Okay, I need your help with this, Cole. So you can publicly use, like on your website, a PO box, okay, for like stuff that you want customers to use. A new transparency law got enforced, I believe, where with the state, you have to list, is it just the LLC, a physical address for the LLC? Do you know what I'm talking about, Cole?
Yeah, so really it's kind of so the first question is, does the Secretary of State in the state that you're forming the LLC allow that? Generally, I mean, our Secretary of State wants a street address, at least for the LLC address.
Yes, for the registered agent is what you use.
Well, there's a registered office and then there's a registered agent. So you've got to have a principal office of the business in Arkansas. You've also got to it can be the same, but you've also got to have a registered agent address. And, you know, I mean, some secretaries of state don't necessarily, their policies don't always follow what the statutes say, but you've got to do what they want you to do if you want them to form your entity, you know. And there's some states where you can give them minimal information, or you can have a registered agent solution type company like form your LLC and they'll give you an address and all that. But that's the first question, or the first kind of threshold issue is does the Secretary of State allow it where you're forming it? And then what you're getting at is the Corporate Transparency Act, which is actually, once you form a reporting company, which it's a whole nother conversation that even attorneys are all trying to, reel in to try to figure out how to deal with. It's actually a filing with FinCEN, the Financial Crimes Enforcement Network. And I can't say for sure. I think that you can probably put a PO box as your address. I'm not certain on that. We haven't really been filing those just because that's a whole
Legislation
of issues, and it's really on the business owners to decide who is a beneficial owner, who has to be disclosed. Anytime that information changes, you're supposed to file a corrective report, and so it's like for attorneys, we don't really, some firms are probably doing it. I don't know. It's just a kind of a policy decision of the information needed is in the hands of the client. I mean, if their address changes or they're no longer associated with the company, they're supposed to file a corrective filing. We don't have the ability to keep a thumb on every one of our clients and say, check and say, is everyone still in the same house? Is everyone still in the same position? So that's a whole nother filing requirement. Way more than you asked for.
Hey,
but
Lori,
Yeah.
we've got a couple of questions in the Q&A pane. What limitations are there for SBA loans, the most common type, if any, on how the loan may be used for business? Oh, Ryan's answering that. Okay, cool.
Yeah, well, but I can go ahead and just speak to that if that's okay.
Sure.
You know, it has to be an active, ongoing business that you're involved in. For example, rental property is not an SBA eligible type because that's a passive activity. But if it's an active working business concern, there's not a ton of limitation, but the SBA is going to want to review and see what the intent of what you're going to spend your money on is. So I don't know, Gregory, if you have some specific things in mind, but you can use it for payroll, you can use it for rent, you can use it for working capital, you can use it for inventory acquisition, you can use it for expanding into new markets. SBA is probably not the best if it's something, say tech driven, where you have to do a bunch of R&D first and then hope that there's a market for it. But if you think of a normal operating business, something that you go to work in a 9 to 5, really anything that would be encompassed within an expense of that business is an eligible use for SBA funds. There are some industries that SBA doesn't like. My SBA guy calls them the fun industries, but they're not going to finance, adult entertainment or CBD cannabis or, anything that could be gambling or construed along those lines.
Okay, the next question I have, I'm going through these in order, is what's the cost for help with LLC startup for Wright, Lindsey, Jennings with you, Cole? Or what's the range with it just says, what's the cost for help with LLC startup with Cole's company? So with Wright, Lindsey, Jennings, so I guess just what's the range?
Yeah, I mean, it's hard to estimate at the beginning because there's just so many different variables. I mean, we just generally charge at our hourly rate, but I mean, it depends on, whether you're a single member, whether you're gonna have multiple members, the nature of your business. I mean, generally we'll get like an EIN and stuff for people. Some people we don't generally do, like business licenses or sales tax permits and stuff like that. I mean, we don't, that's not part of our general package.
We can help with that stuff. Like those are simply like website links, and like you can do those things yourself pretty easy, and we can help you figure that stuff out.
Right. And we try, I mean, some people that just do a single member LLC, I mean, you can there's nothing to stop you from going to LegalZoom or something like that, it will give you the documents you need that are, and if you're a single member LLC, sometimes you don't have to worry about another member suing you or something because you're the only member. I mean, so, if you guys can do something, we always try to steer people to anybody that can do something, or if you can do it yourself, we're happy to review it, but it's cheaper for someone else to handle it than, I mean, we're get somebody what they need with the least cost, involved.
I would say if you do it, here's my take. If you do it yourself, at least have a lawyer review it, because you just don't want to get in trouble depending on the type. I always say if people can get hurt or you have stuff that can get damaged, like if you're selling, I just that's all, because people come to us with LegalZoom with risky in terms of human injury or big assets that would like cost a lot of money if they got taken. That's always my view, is maybe do it yourself, but have an attorney review it. Okay, the next thing is there is a link here for the question about like lack of assets and savings. Forge, and the link is here from Ryan, is the option, and you can email me for this stuff as well. Is one of those CDFIs. Communities Unlimited is another one. Thoughts on Kiva fundraising. Startup Junkie is the Kiva expert. That is also a good option for funding. I am not an expert on that. They do, or it may be a separate entity now. But that is another financing option.
Yeah, that one, I think they cap out at 15,000 is their maximum amount, but it's a legit good organization from everything that I've seen.
Yeah, so the thing is explore options. The key really honestly is having a solid business concept, and like we talked about, that viability. Do you want to do it? Is it gonna make money? And then, okay, go out and finance. Go out and get the financing. Okay, do I need proof of residence with a lease or utility bill for a business mailing address in order to open a business bank account?
You don't, as I'm reading that question, I'm taking it from the standpoint of, does that need to be something separate from your regular information? I don't think so. I mean, we have people that open business accounts with their home address all the time. So, there are requirements when you come to open a bank checking account. And I will just mention that those sometimes are not the same as what we require on the loan side, but you will need to be able to hit our normal customer identification, which does include usually an ID that's got an address on it that's valid. But if you need your mail to go to a PO box or a different address for your business, that's not a problem. You don't have to prove to us that that's where your business mail needs to go. You just prove who you are, and we'll take your direction on that.
Okay, we've got one last question. What if an LLC is already in place, but it wasn't done properly? How do you go about correcting that? Or do you have to start from scratch?
I mean, it really just depends on where it went wrong. There's some things that can be easily corrected. Some things are just, it kind of depends on whether it's gone wrong in in relation to the members, or whether it's gone wrong with the Secretary of State. Sometimes you just have to pay past due franchise taxes. Sometimes you have to just dissolve the entity and start over. I mean, it really just depends on the nature of the issues, and then kind of just going from there. But there's not like a wholesale, you have to do this or you have to do that. It's really case specific.
We see them on the banking side all the time where it's an amended and restated operating agreement, where maybe things didn't get set up properly, but then some of those questions get answered. So to Cole's point, it sometimes can be adjusted. I saw another one pop up. What address to use if the property is currently being built or developed? I don't know if that's for LLC or the business side. But I know that a lot of our folks, when that question comes up, is can you get mail there? And if so, go ahead and put that as your address. Otherwise, use the address where you're currently operating or living from, and then update once you're moved into the new place.
Okay, any other questions?
Looks like one more popped up in the chat. Another one, my final one. If an LLC is formed but no business transactions took place in a tax year, are taxes typically paid on the LLC? Cole, I'll let you answer that. But you do have your franchise tax, $150 a year, just for being able to have it. But
that's right. And this is more of a CPA question. I don't file tax returns or anything like that. I mean, if it's a single member LLC, then business activity flows through to your personal return. If it's not, I don't know. I've heard differing opinions. Some people don't file them. Some people, that's not to say that you can do that. Some people file 0 returns, just to show the IRS that they, there wasn't a gap in filing, and just to show them that, or some people call it a no activity return. Probably the safest thing to do. I wouldn't ever advise anybody to just not file for an LLC, but you're not gonna just owe phantom taxes if you had no income. Aside from like Ryan said, paying your franchise taxes and stuff like that. But that's my answer to that.
yeah, additional tax question coming in there. On quarterly or annually. Again, I can't give any tax advice, and Cole probably can't either. But I think that's a good CPA question. If you think you're going to be making a lot of money and pay taxes, I know from a banker standpoint, we see people pay quarterly taxes quite a bit, just so that they don't have to turn around and write the big check once a year. Other folks don't like to give the government what they would call an interest-free loan, and so they're just gonna wait till it's due and pay the whole thing. It goes back to you planning and knowing your business and your cash flows, and when you know, I can write a check, but it's never a bad plan to pay them quarterly, I don't think, but that's
I think that goes back to that cash flow planning. You know, whatever your cash flow, like if you're tracking your cash flow with your bookkeeping and projected sales, whatever cash flow, whatever, you know, your projected cash flow looks like and how taxes fit into that best for your business is probably how you need to plan it out. But a CPA is the best person to tell you.
Okay, any other questions? If not, I would just like to say thank you to everyone for attending. Thanks to Cole Henderson with Wright, Lindsey and Jennings, and Ryan Crawford with Arvest Bank, and Lori Lieblong with ASBTDC for presenting this webinar today on starting a business in Arkansas. Hope we'll
Thank
see
you
you
all for
next
being
time.
here.
Thank you.